Jay Petrocelli, what does it mean to be a buy and hedge investor?
You know, Greg, first it means you follow the 5 iron rules of buy and hedge, and you probably bought our book, so good job on that. It means that you're somebody that manages against the downside, right? You've hedged yourself, you've protected yourself. Hedging works because you've limited your downside risk, right? So in these markets, in these volatile markets, if you look at the last 10 years, right, buy and hold has really got its teeth kicked in, right? It hasn't done so great. If you hedge yourself and take away those big downdrafts, the buy and hedge investor will outperform.
All right, so what are some simple ways an investor can buy and hedge?
We like to talk about using the options markets as a ways to create protection. A very simple strategy is a married put, where essentially you buy a put that's 10% below your stock price.
How active does an investor have to be for your strategy? Because not everyone can hover over a keyboard all day and watch stocks.
Yeah, we totally believe that too. It doesn't take that much time. Once you've established your hedges, it takes maybe about an hour a week to monitor and roll them or take a look at them. But in overall, this is a longer term methodology, right? We're not talking day trading, we're not talking swing trading. We like to invest for the long term. And we know people don't have all the time and resources that the professionals do to trade really actively in the market.
Are there certain stocks that lend themselves better towards your way of managing money? Can you give me an example?
We actually like the diversification of ETFs, right? We like the SPY, we like the Qs. We like to buy those because they give you broad-based exposure. They have a great options market on them, so it's easy to create your hedges. And not to mention, they're a little cheaper from the perspective of what the fund itself will cost an investor, say, versus a mutual fund. So SPY, Qs, we actually recommend have half your portfolio in broad-based indexes. And so we like those just to start out with. We like some people to take some shots if they're smart about, hey, I know a stock, I feel really good about this category. We call it unleashing your inner guru, which is one of our rules. But we like people to take a shot from time to again. But if you're hedged, if you're protecting yourself, you can be comfortable that, hey, if I'm wrong, it's not going to kill me.
So there is some speculation involved in your buy and hedge strategy, but is this an all-encompassing strategy? Can you buy and hedge your entire portfolio, or is it just for certain parts of it?
Rule number 1 is hedge every investment. I wouldn't say necessarily speculation. I think you're accurate in the fact that we want people to take shots and say, hey, I know something here, I want to be able to play it. We like protection on that. But rule number 1, hedge every investment.